All right, so welcome everyone. This is just gonna be kind of a, a pop-up session with me and the bro Shane today. I really just wanted to talk to everyone about kind of your journey throughout the week of trading, how it becomes a cycle, how you start to see patterns in the different days you trade and the different type of setups you trade. It's essentially a psychology. It's human behavior. We've seen it. It's the whole signature pattern. And the reason I want to talk about this is because a lot of us don't realize that we're kind of in this psychosis almost of being in line with what the market maker essentially wants us to do, guys. A lot of us don't realize it. And this is what I say. You really need to pay attention to your early trading in the week, like Monday through Wednesday, especially because we know a lot of induction occurs around this time. And yet our setups may present themselves, meaning our entry criterias may be there because a lot of us are ECR traders. A lot of us learned from Brandon how to take these retests. Let's be real. So what you're doing is you're seeing your entry criteria and you're taking these trades, and it's essentially a gamble. It's still a gamble just to take your entry criteria if you're not paying attention to structure. Now, we always preach structure, structure, structure. What is it? Does what follows structure? Structure is anything you see on this chart. Structure is human emotions represented through Japanese candlesticks for us in this context, okay? So we always want to be paying attention to essentially human psychology. And the more we reinforce this, the more we preach this, the more I keep saying this, the more it starts to set in. Because I know when I first started learning with Mark, especially with Mark English, the big homie, he was telling me about watching for these traps and watching for these liquidity pools and higher highs, lower lows. And all of this just kind of was just words to me, just concepts that didn't really click. And over time, maybe it comes to other people more naturally. You just pick it up and you get it. But for me, it took a lot of just reinforcement, a lot of watching these same videos over and over to really start to get it, right? But not just consuming the content and studying the content. What also brought the deeper understanding was just to be in the market week after week, just to be the victim multiple times and that's where, not to get sidetracked, but that's where you have to have the wherewithal, you have to have the mental strength to basically get shit on week after week and bust your ass, wake up at 4 a.m. and sometimes you just be happy to make back what you lost or get a little gain, or maybe you had to go down on a micro lot that day because you're building your confidence back up. Those are all small victories, and just stick with it, because once you get everything in place, leverage is our friend, and account growth is, it just happens, y'all. So that's not the issue. That's why we got in this business. But it's about keeping your psychology right. And the reason I was saying Monday through Wednesday are so crucial to a lot of us traders is because, or I should say Sunday through Wednesday especially, is because, like I said, a lot of induction occurs on those days, right? And what happens with the human psyche when you take a couple L's early on? You lose confidence, right? So I can't tell you how many times I would trade early in the week, trying to get in these setups, not waiting for what I needed to wait for, partially because I didn't even know what I was looking for. Point being, by Thursday, Friday, my setups were good and juicy. Market maker then fucked us all over. And then the move happens. And you know what? That's why I love Fridays now. I love trading Fridays, because I realize, especially on these JPY pairs, the market maker will induce all freaking week and just drop it on Friday. And I was that person trying to catch the reversal Sunday, Monday, Tuesday, Wednesday, Thursday. By Friday, I'm crying to my wifey. I don't even want to trade anymore. Drop 100 pips. And I'm like, wow, you know, and not to mention Sunday through Thursday, you bet your ass my man Brandon was buying it up, you know? And then when Thursday came, you know, my man Dylan said, reversal, 100 pip drop, you know? So I say that to say you can get in how you want to get in, but you have to know what you're looking for. You have to realize what structure is doing, what's going on with human psychology. Brandon can buy those inductions because he knows humans need to be induced to keep buying by the market maker. Dylan knew to sell that reversal because he saw enough humans have been induced for the market maker to make their true move. We're shadow boxing with them. We have tells by them. We basically are metaphysical traders in a way because we can't see behind the market maker's console. We can't see the order book. We can't see other people's stop hunts. So we have to reverse engineer. We're essentially scientists, guys. And there's no other way around this. We're basically psychologists and scientists of the market. And it's a heavy weight to wear, but us as mentors find ways. The reason we are mentors is because we found ways to break this understanding, to break this knowledge down into ways where we can convey it and help others. You know, I could say, fuck this. Like, I just gonna go trade by myself and make my money because now I got the knowledge. But that's not my calling in life. My calling is to help others. And I want to help everyone who may not be from the greatest circumstance, or just good people who want to change their financial future, who want to be financially free, who want to take care of their family, who want to be alchemists and live their dreams. That's why I'm here, because I know we're all one, guys, and I am you. So let's just continue to help each other. And that's kind of all I had to say about my rant. We're going to go ahead and just kind of look at some structure here. Do we have any questions? I'm going to actually check the chat here. Okay. Yeah. Santiago said I'm telling his story. Cola said people see charts or markets differently through their eyes, for sure. Shane, did you have anything to add on this? What you think, bro?
I mean, I kind of like what you were talking about, like how the market's like having to do with like human emotions and all that. One thing that like I've been discovering a lot recently is like so many people, especially like when you begin, you're just like coming into the market trying to like make money, and like that's your whole like purpose and goal. But like when you think about it, like everywhere you go, like money is like already around you, and people like are always approaching things like, oh, I need to make money on this trade, but it's like the money isn't in the trade, like the money is in you. And so that's why you got to like focus on the trades and not like the money aspect of trading. And I know for so long, like that got me caught up, and just like starting to shift my perspective, and really realizing that like both like in life and in trading, like money like is like so low on the importance level because it's already like everywhere you go. Like you walk down the street, you see a building, like someone paid for that with money. Like it's literally everywhere. And so people, especially in trading, are just like approaching it with such a lack-filled mindset, but it's like it's literally everywhere you go. Every person you run into at least has some sort of money on them, or something on them was paid for with money. And so just like once you like remove that out of it and just like dive deep into like human emotions and psychology, even like the whole like psychological levels thing, it like breaks down the structure of the market so much more. And yeah, so I don't know, I really like what you're saying about that.
Yeah, it's something that really happens over time. And it may have been a little different for me because I never really learned retail trading. Like I learned some Elliott stuff and like Fibonacci stuff. And like I'm a you know, that's kind of what got me into Forex, because I really like sacred geometry and stuff like that. But when I actually started to learn how to trade, I was blessed enough to go to like right to Forexia, right? But
Yeah.
it was almost like weird. It was kind of different. So it was almost a disadvantage because I didn't understand support and resistance from a retailer standpoint. I just heard these, you know, the mentors telling us about it, but I was never taught like to trade that way. So for me, it may have been a little different, but the more I started to, I even had to go down a journey where I had to kind of just learn how to think like a retailer. That's key. That's it. Learning to think like a retailer and a market maker at the same time. And I know I sound like I came to an epiphany, but that's what we always preach. What were you saying?
Yeah, I had like a similar thing because like the first thing I ever learned about like Forex was the M&W course. And so like I was like, oh, like all this is like super great, but then I didn't really like understand like how like retail traders thought. And so like I actually took like a week once and just like ingested all this free like retail trading information just so I could like understand like what they were thinking, and that like made the human emotions aspect like so much more like visible looking at the charts, because you could just like see like around different areas like how people are like reacting to it. And so
Like
it's
these
like,
areas I circled?
yeah, exactly like that. And so once you like start to understand like how like retail traders are thinking and like mix that together with how like we're learning to trade or have learned to trade, like alongside the market maker, like once you can combine that two together, like it makes one, trading a lot easier, and two, a lot less stressful, and you start to see it in a lot of a different light.
Yeah. And that's how you get confidence in your setup and in your trade. And then you don't get so antsy about moving to break even and, you know, little things, because once you have like done your due diligence and you like have this belief in a setup, and you're not just saying, oh, they say take this, or, you know, Dylan said take this, it's gonna be different, to where I compare it to, it is alchemy. It's basically you're casting a spell. And I have like weird quirks about that. If you guys notice, I don't like to post my trades until I secured. And because it's my superstition that I'm gonna mess up my spell if I talk about it too early. So it it is an alchemic process when extracting money, extracting pips. And you definitely need to have a clear understanding, because that, I guess the clarity is huge, because that's one of the things a lot of traders, when they're struggling, they'll come to me. It's just that they're confused, they're overwhelmed, and there's a lot of knowledge, a lot of signals, a lot of input. So that clarity is huge. If you got to leave the close your Telegram for a day, just do it. Okay, all right, I guess, oh, Hooman's here. Let me go unmute him real quick. And then we can look over GJ, and then I'm gonna actually let you share your screen, Shane here.
All right.
You can show whatever you want. Hooman, you can unmute, brother.
What's good, guys? What's good, everyone? Sorry,
Yo.
I'm just waking up.
Good morning, good morning. Nothing, we're just yelling at people.
That's good. I was actually looking at this that you're showing, the GJ drawing.
Oh, I just deleted it.
You can undo up there beside replay.
How do you do that? Just keep clicking it?
Going. Yeah.
Okay. Oh, I might have screwed it up. Anyway, I can redraw it.
I just heard that you're talking about how thinking the retail trader way is important, and thinking like market maker. And in your drawing, that's when you guys can see the difference. You know, when you trying to predict the market and you shift from those type of prediction that says like, oh, it's gonna go here and then drop, it's gonna go there and drop, it will transform to a fully totally different understanding that, oh, price gonna come here, do this, at the same time going to do this. You know, I mean, stop hunt, inducing, for example, stop hunting sellers, inducing buyers. They have to reach this point because that's where retail trader going to commit. and then it will come to this point because of this reason. When you see the market like this, then you're thinking like a market maker. So how I can see that Elwin is thinking like market maker, because he creates a trend. Exactly, he creates a trend and then break, retest, and then trap it. So this is thinking like market maker. In your prediction, if you're trying to go and just find where market is going based on technical analysis, you're wrong. But what you should do is say, okay, now market maker came here. I think there is more liquidity down there. They're gonna create lower low, and then this is where retail trader believe this trend is valid. So let's break and retest it. Once we break and retest, they start buying, so market can sell off again. This is not something we can, well, we're trying our hardest to teach you how to think like a market maker, but this is only practice, guys. Like, if you go to NZDUSD and scroll it back up for 2-3 weeks, you will see how perfectly. This is just, you can go to Forexia YouTube channel and see the video talking exactly about this. Ups and down, this pump and down with a signature trade back up there. Come on, seriously? You can see this from 2 years ago. Like Forexia teaches this for at least 2 years. I started, they were talking about this, and you can see it still is happening. While a lot of other, things like expert advisor, indicators, everything, will be identified by market maker algorithm, and they'll change it. This is not something they can change,
Mm-hmm. It's human psychology.
Yeah.
It's just everywhere. I actually looked at one of my accounts where I kind of went up and down for a long time, and it basically looked just like a market maker chart. I shit you not. And I'm like, wow. That's when you look at yourself and like, what the hell is going on?
Yeah,
But yeah, I just
exactly.
actually caught this trade. I actually swung this into the next week, and it is a prime example. It was one I shared where I essentially waited for the shift out of the peak, the retest on a Friday. Like I said, I like the Friday trades, and I actually held it over this weekend for about 80 pips. And if I would have like trailed to my WMA, I'd still be in this one. So, but I trailed the DMA.
Very nice trade, bro. Yeah, NZD, JPY, AUD, they all been good this week.
Mm-hmm. Shane, you want to go ahead and share your screen, brother? Anything you want to share
Yeah,
with
sure.
us?
Oh, hello, Shane. Sorry, man.
Nah, Shane went crazy this week. I don't know if you want to tell him.
Yeah, I think what was my total? Like, it was like 500 something pips on 6 trades. I think it was like average of 86 per trade.
I think you need a request to share. Oh, there we go.
All right. So yeah. Basically, like before I was just gonna go over the GU trade I took, but before that, like last weekend, I think it was in Elwin's like group chat. We were talking about like swing trading because he was taking that NZDUSD trade, and I just like sat there reflecting over the weekend, and I was like, man, like I never really have like done swing trading or anything like that, and so I'm just gonna like study it this weekend and then try and implement it next week. And so one thing we've been saying a couple times this week is just leveling up daily. And so I was like, all right, most of the time my trades are like 30 pips or so, which like isn't bad. It's like 1 to 3 risk reward with like a 10 pip stop loss. But I was like, all right, this week I'm gonna try and like not even move to break even until I'm like 30 pips and just like let a trade run. And so that's what I did on GU. I'm gonna go into replay mode and just try. Oh yeah, I'm already in replay. So basically, like this is like what I saw before I took the trade. It was on Tuesday, I think it was. And so like literally every single day, or even like over multiple days, because this is the 1 hour time frame, like you're seeing the same thing: consolidation, it's breaking low and going up. And like most of us know like about like daily structure. It's just doing that over and over again. And like that's part of the whole like thinking like the market maker thing is because like a lot of retail traders might be like, oh, this is resistance right here. I'll sell this, and they get maybe a little bit of profit, but then they just get screwed over a couple hours later. And so that's what was happening again before I took this trade. And you can even see it down on like the 15-minute time frame. It's even more obvious. Just over and over, the exact same thing is happening. And so,
And it is a signature trade as well. Sorry to interrupt. It's a signature trade, but in form of continuation, not reversal.
Yeah.
Yeah, I caught GJ at the top.
And so I entered like right on the close of this last candle that's showing here. And I think I extended my stop loss since I was practicing swing trading. So I had my stop loss like right down here. And I didn't even like want to like take profit or anything until like 100 pips, because like I figured even if it will reverse, it has to come back to this high. And so basically that's what I did. I just let this thing run, and I had like 3 positions on it total. So I took one right here at 100, and then I took another one like. So I took another position out. I think it was, oh yeah, and then it did it again the next day. If you look, like the structure just did the same thing. And so I took the next one out. I think it was like near this high again. It was like 100, 120 pips. And then I took the last one out on this giant green candle here.
That's what I was selling GJ.
What a beautiful trade. Well done.
It was like 160 or 150 on that last one. So basically, like last weekend, what like motivated all this was I was like, okay, like 30 pips is great, but I want to like be able to also like have like some swing trades and just like buy or sell and just like let it run, like me and Elwin were talking about. And so basically, like whatever it is your goals are, like you need to like be reflecting on those and seeing how you can like progress and become like a better trader, better whatever every single day. And so like that's what I did. I sat there, I reflected over the weekend, and I just studied like the market structure on a more macro level.
Exactly.
Because if you look down on the 15 minutes, it's the same thing. It's just more candles. And so like we always talk about the multifractal nature of the market. That's exactly what was happening here. And just the daily structure was playing out on a more macro level, because it's like 4 days that played out, like kind of consolidated, broke, and went up over those 4 days. So basically, like wherever you are in your trading, like always be willing to like adapt, like have a set like rules, but also like never be afraid to like adapt and adjust to different like market conditions, or even to like have a scalping strategy or even like more swing trading strategy. Because I still love like Asian session trading with like Brandon and those ECRs, but I also wanted to like implement this into my trading. So yeah, as
you can use your risk management to help with that. So like if you're trying something new, like I'm not gonna demo, but if you're trying something new, just make like say you generally risk a 0.1, and then say you want to try a different setup that you've been back testing, try it with a 0.01, you know, try it with a 0.01 10, 20 times and get confidence with it. Then that's how you can implement the new stuff, is by, that's the whole point of like mastering your risk management, because that's how you're gonna control your growth. And even someone like Brandon, like I talked to him about this, he still deals with this. So like, regardless of what level you get to, it's always gonna be something that you're battling with. Is it gonna, or, you know, working with, let's not say battle. Are you gonna do 500 standard lots? Or are you gonna do 200? You know, it's still, no matter what level, you're gonna have to deal with that. So master it at your level now. I forgot what I was gonna add. Oh, that's what, like, a lot of people will tell me, like, or ask me, like, how do I get a good ECR that goes for 100 pips? Like, I always get one that goes for 10, 20 pips. You know, usually it's because, like, maybe they're just trading like a seller trap, or they're, you know, taking a move into consolidation, and it's just, you know, still playing to consolidation. So to build on what Shane is saying, I always say you got to take it to the macro. You got to start to break down the multifractal and put the big story in place. And that's kind of what if you saw that first chart I had pulled up with odd JPY, it was so beautiful because the daily inductions led to traps on the 4-hour, which led to sick, clean ECR entries on the lower time frame, which could lead to, you know, 100 pips. So it starts on the higher time
I have
frame.
another answer for that guy too, whoever it was.
Go, bro.
So he said, why you, the question, I just want to know if I'm right. The question was that why your ECR goes 100 pip and his ECR go 10 pip.
Right.
So the answer is because you take ECR and sell when market is buying. I mean, retail trader is buying, but his ECR is when he's selling, and most of retail trader also selling. I said it in the yesterday's webinar, I think in Academy, or 2 days ago, I'm not sure, that you guys have to check. If you are selling, retail should be buying. If there is some sort of, you know, pattern that you can see retail could see sell, just ignore the trade. We're not in business of, you know, just taking trades and see, you know, and win this game using the, you know, only risk management.
Right.
I want my students at least, and I know Elwin wants the same, to kill it, to take trades that go crazy in profit right away. And that doesn't happen if you don't check what retail traders are doing. You know, same thing with the concept of M and W. I said if it's a double top, don't take that M, because retail would sell too. But if it's a support resistance that became support in an uptrend, take that fucking M, right?
We're looking at a prime example right here.
Yeah, like right here where I went long on GU, like if you were just taking an ECR because they crossed over, like you would have maybe gotten a little bit of profit. But if you look at all the, like, why are you trying to sell against all this?
You know, with EMA, it's, everybody knows, you cannot trust them whatsoever. You know, as a directional bias, you cannot go to the different time frame and say, oh, I see this direction. With DMA, it can help you towards direction, but if you don't pay attention to what we just said, even DMA can't help you. You know, I always say use EMA or DMA only for entry, but I'm gonna be honest with you. If you wanna guess a direction using DMA, it will work a lot of times, which will not work in EMA. But still, none of our students here in this webinar should take trades based on DMA direction, but they got to use, you know, the lesson 1, guys. Lesson 1 of Golden Eyes. You gotta draw that trend line, find the induction, use entry, use DMA for your entry. Simple as that. What exactly Shane did. Structured the market using the trend line and then guess the induction using daily structure. Do you see any indicator in this conversation?
Don't need it.
No.
Yeah, I didn't even use EMA last week.
That's it.
Yeah, use EMAs for what they are. Even if you're like using them the opposite way, how can I explain that? You need to just don't use them just to enter your trade. You can make that part of your entry criteria, but yeah, just don't get caught up in just seeing a cross, seeing a retest, taking it. Once you get burned enough, you start to realize that shit just does not work. I mean, at least that's how I learned. Like Hooman a year ago, Remember when you asked me what ECR was, and we got burned all those times, and we just racked our brain and figured out why. Then we met Mark, and he said, "Yeah, you're buying this seller trap." And we're like, "What that mean?" Now look at us. Now look at us.
Wow, that was I remember when Mark English talk about traps, and he draw that zone, and he said, "Look, 1, 2, 3, break, retest, and then information drop." That was a EMA 14 trap. I wanted to break the fucking monitor because I spent so many hours taking that trade, like not knowing that's a trap.
Yeah. And now we use that as our power. I wait for that, what we call the safety trade. We wait for the trap of the sellers in a situation like that, and then we wait for the breakout, and then, you know, that's when we'll see a valid M, you know. So
Yeah.
all that stuff that was your weakness, what you do is flip it and make it your strength. You flip it on its head. So don't even get caught up in your weaknesses. Just look at it like a puzzle. Like, I remember looking at this type of structure like that GU showed this past week and just being so confused and not knowing what's going on. But now I realize, you know, it's an induction. I could wait for what I'm looking for. You know, like you said, that fake resistance term support trap. So like on this, I wasn't even looking to take the same move Shane was taking, even though it was a great move. I was actually waiting for the induction to finish so I could take it the other way. And, you know, it just comes down to what you're looking for, guys. We're down to 1 minute. We're going to wrap it up. Sorry if we didn't get to all the questions.
Yeah, I'm gonna have another session, guys. I'm not sure where this link was shared, but it's going to be for VIP students, and it's gonna be in 30 minutes to 45 minutes. Just get ready.
All right, guys. Later.
See you.
Thanks, Shane. I think you're gone.
You're welcome.
Oh,
See you, everybody.
See you guys.